Hello, everybody. I wanted to make this video because I see people asking about some of these Chinese stocks the other day that were getting beat down, along with a whole bunch of other stocks that were getting beaten down. And I replied to them, be careful of buying Chinese stocks, because if anybody trading, if you saw what they did to the Russian stocks, anybody who bought into the Russian stocks, any normal people were basically obliterated. They're probably going to lose everything. And if something goes down with China or any other country out there, you have to be pretty careful about which country you're going to invest in, because the United States has shown that they are hypocrites and they hold other countries that invade other countries to a different standard than they hold themselves. And they're still in charge. So as far as an investor, it doesn't have to make sense. It doesn't have to be fair, but when you lose your money, that's real. So number one, beware of investing in Chinese stocks, even at these discounts, because you can lose everything. You could try to get in and out, but this could happen, overnight, and then the markets just never open for those stocks. So be very careful. Number two, I was going to review, I haven't shown a trade on here in quite a while. And I'll do that in another video, because the problem is trying to show my system through Zoom. It's impossible. It will have all my data up there, and it's so I have to go into the Yahoo Finance. But long story short, all the trades that were recommended previously have all made money. It just, sometimes they don't make money immediately. Sometimes it takes time to wait. So, but it's been less than a year on some of those trades, and they've already generated a return. But I wanted to put out one trade idea. And let me go to, now I've been accumulating this position for the last week, because I saw that it was probably going to bottom. Hold on, let me share the screen here. Okay. So we have TLRY. It's currently trading. Today is the 9th of March, Wednesday. And it's currently trading at $5.49. It got down to $55 yesterday. And that was basically, I think, going to be the near-term bottom, unless something rolls over. The problem is in the way the market is right now, you have to really be very picky about what stocks you're going after and how you're purchasing them. So you can see that over the last year, TLRY has just been a downward slope, right? If I zoom out to the 5-year view, it's like a ski slope, right? Or a slide, up, 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 up over here, and then down it goes. And it's pretty much at its 5-year low, pretty much. You'd have to go back to 4 years ago. So are the marijuana stocks dead? Or is this a buying opportunity? That's what you have to ask yourself. Could it go lower? Absolutely could go lower. But this is the beauty of selling puts, okay? Because what you're doing is you have to go in and make a decision Now, ideally, you want to look for a reversal candle, and I think that's what we got today. Now, it could be a head fake, but you can also argue right here. And I'll just draw this line in here, dark blue. So you could argue that you have a trading range here since December. Let's see Yahoo. I'll put them in straight. Okay. Okay. Okay, so I just drew in some quick lines there. So since December, you can see it's been basically trading in this range, and you see the Bollinger Bands. Look at the volume back here in January when it shot up from 6 up to $7. And now it's been just oscillating. So down, up, down. Now, could it go down? It could, but TLRY has actually been busy behind the scenes doing some deals, acquisitions, partnerships. They've been doing pretty good work. So I think this is going to rebound. And I don't think it's going to go to the moon, but I think it's going to bounce off the $5 level back up, at least to the midpoint. You can see the averages. Okay. The averages are, the 20-day average is 618. See right there. See if this thing moves. 50-day is 636. So if we go into options, so this is for this Friday. So even if you did a $5 put, sold a $5 put, what does that do? Well, only pays 5 cents. That's 1%. But this for 2 days. But then you'd have to pay the trading fees. It's if you just wanted to get a position, right now the price is $5.50. You could basically sell a $5.50 put for Friday and collect 15 cents, 14 to 16. So you'd get 15 cents on that, probably. So your cost basis would be $5.35. And if you wanted to go out a week, see, the way to play this, in my opinion, the way to play this is sell a put, an aggressive put in the money, get exercised, and then turn around to sell a covered call with the belief that $5 is the bottom. Okay, so if we go to March 18th, okay, so if we go to puts and we look at $5.50, you'll see that they're going to pay us 30 cents. So that means we're going to get paid $30 because that's 100 shares. So we're going to get paid $30 betting $550. So we'll either collect that 30 and not get shares, or we will get exercised and shares will have a cost basis of $5.20. And then what we would do is we would turn around and sell a covered call for the following week. So TLRY right now, they're losing money. They just had their earnings back in January. And it's been pretty choppy. Like I said, it's been in a range since December. Still sloping down. So there is risk because the entire markets are not good. But if you want to collect premium, now, me personally, I don't think there's a lot of downside here. And what I would do with this is I would start with 1 or 2 contracts, right? Maybe space them out, do a $5 or $5.50 put for this week or next week, and then go out 1 contract per week for the next 3 or 4 weeks. And as you go out farther, maybe you choose a $5. it depends how much you want to play this. If you want to play the premium, then you want to be more aggressive. If you're just trying to collect money without taking possession of shares, then you want to go a little bit more conservative with that. So now commodities have been popping. So if we look at now Square Block, this one has been very volatile. And this is a tech stock. So you'll see that over the last month, it has been up and down. This one, you could make 10% on this in a week if you time it correctly. And what you want to do is you can see that now there's no hard rule here, but obviously this stock has been getting crushed. It's down from $300. But when it hit $80, I sold several in a range. And it happened to pop higher, back up over $100. $100 is the line in the sand for Square. And it went down yesterday to 95. So you'll see there's still volatility because there's still a certain amount of uncertainty. Now, volatility is your friend when you're trading options because typically you get more premium, which gives you a better cost basis or a higher return on investment. So what you want to do is you want to identify stocks that offer these type of opportunities or become very familiar with the movements of some stocks. For example, one of the ones that I trade like that because it is so erratic is First Majestic, and they're reporting earnings on Friday. So they typically kick people in the face after they report earnings. So I'm kind of expecting a drop in the price, but with the way commodities are, it could attract a whole bunch of people who want to get into a silver play. And so it could drive the price up. This was $14 yesterday. And you can see it fell to $12 today. I think it had a low at $12. $12.32 was the low today. And now it's probably going to bend back over. Now you see that one of the things I want to show you is, look, with these rapid moves, you'll see this tan area or orange area. It's called the Bollinger Band. And what it does is 95% of the time, okay, the stock wants to stay within this band. Now, why is that important? Because nobody knows the future and everything is uncertain, right? So you're looking for any edge you can get. So right off the bat, if you can say, hey, 95% of the time, it's going to stay in this band. Well, if that's a true statement, then 95% of the time means that this thing is already at the top of its band, right? It's already up here. In fact, yesterday it went outside the range. So if it goes outside the range, 95% chance it's coming back within the range. And that's what it did today. So you need to be very careful about trading this long unless you're going out. See, I wouldn't do a near dated expiration on this unless I knew for sure with a high degree of probability that it was going to play out as expected, or I wanted the shares at a certain price so I could turn around and sell a covered call. So on this one, this would be the time to sell a covered call. If you have shares, this is when you'd say, okay, it's getting near the higher end. I want to sell shares that would pay me up here somewhere. And that would mean, depending on how far out you're going, the likelihood of you getting exercised is reduced. And that's the whole point of selling a covered call. In most cases, is you are either hedging your position or you're looking to collect premium, like a dividend, right? Or collecting interest. So if I have $1,000 in First Majestic and I want to collect 5% in premium, this is how I would do it. And this is how you can, this is the beauty of options and why selling options is a big advantage over buying options. Because buying options, time works against you, whereas selling options, time is your friend. So you can see this was in the middle, worked its way up to the top of the Bollinger Band. And this stock, because it is such a volatile commodity, it would not be shocking to see the next move start heading towards the bottom of the Bollinger Band. Now, this Bollinger Band will adjust as the price adjusts. So that Bollinger Band could work its way up here. So it's quite possible this could work up and then roll over and come back down to like 11 bucks. Would not be shocking. So that's another potential play. So, but I would wait until earnings are reported on Friday and then make a decision. Next week is Fed week. The Fed's going to be speaking, and typically precious metals get hammered before the Fed. So that could be factored into this as well. So I don't think an $11 price. So if this gets back down to 11 bucks, that will be the time on First Majestic to sell a put. You could sell like an $11 put and go out a month and collect at least $1, maybe more. And that would get you a $10 cost basis, which I think is a pretty good cost basis, because now that would put you down into the lower ranges. Even if you look over the course of the year, $10 would put you down here. And you can see over the course of the history of this stock, this is probably going to bounce higher. So getting in at a $10 cost basis would be an excellent. And if it doesn't go that low, right, you'd still keep that $1. And if you do 10 contracts, that's $1,000 in your pocket for just waiting time. Pays better than a bank. So several of these miners have recently moved. They moved extremely rapidly, very, very fast and very high. So very difficult to capture those moves if you, unless you were waiting for them. Now, this is volatility. You can look at volatility, because this is an excellent, this one can rip your face off actually quite easily. But you'll see over the last year, volatility has been sloping down, right? Which is normal. And then they have temporary pops, right? Pop, slope down, pop, slope down, pop. And now since February, you notice that the slope has changed, right? Let me draw this in, right? So you see this slope has been right there. And then it popped, sloped down here after it popped, right? That's what volatility will do. There'll be a scare of some type. Something will happen. It will pop temporarily and then resume its course down until it doesn't, right? So really, since February, it's now been sloping up. Instead of that hard slope, it's been a gradual slope. So this could be a trend change. This could be a trend change because the volatility is elevated. So next week's Fed week, volatility will probably get pushed down next week because they'll come out and lie and cheat and steal and do what they do. And the markets will gladly buy it because the markets are complicit in everything they do. And then it will probably take a couple weeks for reality to set in. And what you want to do is on volatility, if volatility gets pushed, right now the VIX is at 2630. If this gets pushed down to say 20, right, there's 18, yep, there's 19, 1942. Yeah, so if it gets down below 20, then you might want to look at a position, taking a position, selling a put. Well, actually, I wouldn't sell a put on this because it can rip your head off. On this one, you would definitely buy a put, or buy a call, sorry, buy a call. Because what you'd be doing is, if it came down to, yeah, the lines in this don't work, but right now it's here at 26. So it would come down below this average line right here, below the 50-day average. It would actually come down to test this lower Bollinger Band right there. So if it gets down to this lower end of the Bollinger Band, you know, it might be worth putting on a position to go long on volatility. Because that's one thing that's certain this year, we're going to have volatility this year. We're not going to have, right? Look at the last 2 years. What's happened to volatility? It's been this slope down. And now you can see how it's been flattening out. And now it could start going back up. Because look where it was. Look what happened during the pandemic time frame. It shot from down here and it went up. I remember the TVIX was up over 1,000. And then since March 2020, it's been a slope down. But when it gets that high, it's still an elevated number. Right? Look at how elevated it is. So if you had played a long position, you made a lot of money. So you would take a very small position in your account on this. You wouldn't bet the farm. But one contract will cost you, if it gets down to 20, one contract, if you go out like 8 weeks, probably cost you $800, right? With a pretty good delta. You want a delta of around 0.9, 0.8, 0.9. And so you're risking $800. And if it starts to go against you, the nice thing is if it drops below whatever the low is here, 17 something, 1750, then you just sell out. And so you're risking basically $250 for that parabolic move. So if China or Russia, they do something else, this will spike back up and you can make $1,000 within a few days. So those are a few trade ideas without a lot of risk, in my opinion. In this market, there's always going to be some risk. Now, if you're a crypto fan, there's a new miner. I was looking at this, CORZ Scientific. They're a fairly new company. And supposedly they have 6,000 Bitcoin on me. So if you think Bitcoin is bottoming between $30,000 and $40,000, then you may want to look at this, because this thing has been punched in the face as well. As you can see, as Bitcoin has crapped in the bed, it's come down to as low as $5.80. So it shot up $1 today. I was going to play this, but it didn't hit my number. And again, you can put in whatever number you want. You don't have to accept what they're giving you. You can, if it's offering to pay you 30 cents, you could say, I want 50 cents and just enter the order, and just, if it doesn't exercise, it doesn't exercise, you know, if they don't accept the order. But sometimes markets move violently. So this one, this is, you could argue that this is a double bottom, right? Roughly down here. And so a bounce. So whoever played that double bottom, like I was going to, and played the bounce, they made, depending on how aggressive with their options, that they're making money today, right? So this is another one to look at. And one last miner for Hut 8. They also have a considerable amount of Bitcoin on their balance sheet, and you'll see it looks similar, right? See, it got punched in the face. It was up near $16. Oh, come on, computer. Some people were playing a double bottom and maybe even a triple bottom. I think the bottom on Hut 8 is roughly $4. Is if you go back and look at it. Doesn't mean it can't go lower, but that's the number that I have in my mind when I'm playing it, like $3.54 is what I look at as, if I get stuck in this, that's the number that I have in my mind. So this popped 60 cents. So this was at 5. So I was going to play this if it hadn't headed lower. So next time Bitcoin gets punched in the face, a good play, an option play, is playing these miners. So if Hut 8 gets down underneath $5, okay, I asked the computer to change it here. So here it comes. So I'm going out to April 22nd. This is the farthest near dated option expiration till the next one's July after this. So if we look at selling a put for this, so if this was down, if this fell down to say $5, if I go up to 22nd, it's only paying 50 cents for $5. But what happens is this $5, so right now it's paying 10%. Really not that good, in my opinion. If you're going out 6 weeks, you want to get more than 10%. But if this fell to under $5, I would pay a $4 right here. I would pay a $4, and that would move up to about 50 cents. So you'd be making more than 10%. But this is another one to look at if Bitcoin goes below 30,000. Definitely do a long-term play on these miners. And if you can sell a $4 put and get $1.50, $2 if possible. When the prices are this low, you typically don't want to buy a call because you end up paying more for the call than the stock's worth sometimes, if you run the numbers versus selling a put. Okay. Okay, so that's a couple ideas. We'll see what happens. I actually have several positions laid out as I explained in TLRY over the next 4 or 5 weeks, running between $5 and $6, $5.50, $6. So if there's a bounce, then what happens is if, say, the price of TLRY goes up to $7, then all of my options will expire and not be exercised. So I will keep all that premium, whatever that amounts to. So I'm playing a bounce. And the other nice thing is, so if you're in a sloping market, you definitely want to sell puts if it's sloping up. And also if you're in a range like I showed you, you definitely want to find those type of stocks or ETFs or whatever they are that trade options. And if you can get in a tight window, you can basically sell puts when it's down here, down low, collect the premium or get exercise, ride it up and sell a covered call. And then you'll get exercised and then repeat the whole process over again. And what you're doing is you're turning those over. So those are taxable events because you're making profits. But what you're doing is if you have $1,000 sitting in a bank collecting 0%, you're better off putting $1,000 here. And on that $1,000, if you make $100 a month doing this, right? That's 10% a month. So if you leave $1,000 in the bank, you might get, what will you get from the bank? $1? $10 after a year? So again, in volatility, it's your friend as far as until it isn't. But if you think logically, like tell yourself, it's like if you were trying to buy a car, right? And you're looking at this car, you love this car, but it's $60,000 and you don't want to pay $60,000. Well, if you woke up one day and the car was worth $40,000, you'd probably run down and buy it. You wouldn't be like, oh my God, there's a problem. It's now worth 40, run. No, you wouldn't run from that. You'd run to it. And it's the same thing with certain stocks or certain tickers here that you follow. So don't try to cover everything, but try to develop your own system, and you can make residual income. Okay. Sometimes more. Peace.